Good day, everybody. Jeffrey Beamer here, Senior Investment Strategist over at ewotrader.com. Welcome to Delta Neutral Live. We are live. It is Monday, June 3rd, and we are back at trading. We took last week off for Memorial Day holiday. Hopefully, all of you celebrated the day for what it is in remembrance of those who have fallen for our country. And for those of you outside of our country, we took the day off to celebrate that type of an event. So we're back at it today. We're gonna start with, as you can see here, we got lots to cover today. We're gonna talk about our past trade that we did 2 weeks ago. All right, we're gonna talk about some headlines that are coming out. Pretty interesting week because we're very busy already with when it comes to headlines. We'll take a look at U.S. markets, also looking ahead a little bit, and we're gonna select the stock at the end of the day that we're gonna track for this week as well. So let's get right to it. We did release a trade 2 weeks ago on PDD. That was used to be called Pinduoduo, and now they shortened it to PDD, which I guess is fine. And you can see here what we did was we exited on Friday. Now that was a week ago Friday. All right, Friday before the Memorial Day holiday. That was the we had earnings after market close on PDD. The next day it gapped higher. All right, and broke through that 153 level, and that's where we were looking to profit. Now we took a small profit out of that, $156. The stock didn't really, break out too high, and then started to sell off. So we took the profit while we had it, and sure enough, by the end of the day, that profit was erased. But we did close it out on that Friday. I believe that was May 24th. All right, when we close that out. So another winning trade here on EWO Live and or Delta Neutral Live, sorry, and a good result there. So let's get into headlines, man. Lots going on. Interesting that I didn't see this being reported until just a little while ago, about half an hour ago, that the NYSE. Now this came out early this morning, and boy, they took their time. The talking heads took their time reporting it. But the NYSE is investigating a technical issue that triggered volatility halts. Now, what that is when a stock gaps up or gaps down over a certain limit, then they will halt trading on it as a timeout. And there are these trading halts that are different percentage points away on a stock. And this really affected 49 stocks. That included Chipotle, Berkshire Hathaway Series A, also Barrick Gold, and others. So pretty interesting day. A little technical issue. They did explain what it was, and it was software related, and all is good. It did not affect trading, which is good. It was just kind of in the background. Next headline here, we have GameStop source. Man, that thing opened up 75% this morning on a post on Reddit by a trader, or whoever named Roaring Kitty. All right, who showed $175 million. Now that is notional, $175 million notional bet on GameStop, and that stock just shot up. I believe here recently, last time I checked, it was still trading up around 30%. So it did sell off of those highs, but very interesting there on what headlines can do to an individual name, especially a meme stock like GameStop. So very interesting there. Then a story that has been buried as far as from the airwaves, but is still out there. Toyota apologizes. The CEO was apologizing live on cheating on vehicle testing. And they've halted production on 3 models, a couple of Corolla models and the Yaris Cross, as well as there were some also other models that are no longer produced that they admitted that they had falsified records. Stock is down 2.4% today and down 16% since the March highs. Still up for the year, but still significantly off of its highs. As we move forward, Treasury real yields are actually, this headline I thought was interesting. It says Treasury yields sink as weak data fuels bets for rate cuts. But what's interesting is the short end of the curve, rates are higher today. Okay, so yields are higher. Now yields on the long term, the 10, 20s, 30s, those did sink. And we'll see that in the charts here in a few moments. So interesting dynamic there, as people are taking bets on when cuts will occur. Now, the Europe is expected to cut later this week. Well, it'll probably be 25 basis points. But here in the U.S., they're steadfast, and I find this very interesting. And we had an economic number on manufacturing that was, we haven't seen a positive number. It was negative, and we haven't seen a positive number in quite some time. So it's not that surprising. But a lot of people are eyeing that as possible open door for rate cuts here in the U.S. I'm not so sure about that, but we'll see. So finally, earnings. We still have a few names, about 175 names this week. There are still some pretty well-known companies. We'll show them in just a few moments. So let's get right into the charts, see what's trading today. First of all, we're going to start with the Spider Index Trust, SPY. I went ahead and threw on my moving averages here. You can see that we're trading right down to it. That 530 level on the Spider is proven to be pretty, that was our target, and we got there and it stopped. Okay. Pretty firm resistance area. We traded a little off of it. No big deal. We came right down to this 21 period moving average. And if I zoom in on this a little bit, you can see that we're sitting right on top of it. Okay. And so this is good for the bulls. We'll see if they can send this up through that 530 resistance level and up to the next target, which I'll talk about once we get through 530. Then I'll talk about that. So be sure to join us next week because I'll probably reveal what that number is. Okay, moving on to the Qs. All right, we're flat today. Same story here. We're holding at that 10 period moving average. Now, I didn't do this on the SPY, but I will tell you, pulling up the Heiken Ashi candles, on Spider, it's green. We have a green candle today. And here we have a day of indecision. Okay. You can see the no body. Okay. Just wicks today. That does represent indecision. And that's good for the bulls after these three red candles, two of which had no wicks on the top, which means momentum to the downside. Today, indecisive. So we'll keep an eye on this. If we break below that 21 period moving average on either index, we could see definite lower trading back down to some pivot lows, I fear. And you can see the pivot low down here. 420 would be my target on the Qs if we did break down below that. Let's look at small caps. They've been holding up really well considering what rates. I've got a 200 target on this. And that was looking good last week, midweek last week. But then as we went into the weekend, look at that. All that the IWM is doing is trading in this really wide channel. The ranges between 190 on the low side and 210 on the high side. And if I give more data here, you can just see what's going on there. Now, that's Heiken Ashi. That's why it looks a little weird. Let me pull up my candles. Okay. And you get a little different idea. Now, interesting today is a pretty interesting candle because it's almost a full engulfing candle from Friday's close. It is on the body and almost on the wicks. So it is showing real weakness. It was showing some strength. As you can see, it was trading up at 207.5 earlier today, and then down it goes, okay, depending on what type of news is coming out. Moving on to crude oil. Boy, the story in crude oil right now is show me the barrels. Okay. It is really taking a toll. Let me see. I had the headline here. Yeah, it's in the show me the barrels mode right now. And OPEC announced an extension of production cuts into 2025. And boy, that sent USO and crude oil down significantly. We're down 4% on USO. That would bring in some bearish targets here, possibly as low. I would start with 67.5, then 65. That would be my range. 70 would be a nice round number. So don't know if that's much of a trade there going from where we are now at 71.81 to 70. So I would call for 67.5 down there as my next target on oil. But pretty amazing move there on crude oil on those headlines. OPEC and at it again. So we'll see what happens with the barrel inventory and refining and all that stuff. And will we see any easement at the pumps? Okay, I've seen prices bouncing around here in my local area, but only about in a 25 cent to 30 cent range. Okay, they haven't been too crazy, other than that volatility. Now, looking over at gold GLD, let's look at the metals. Um, Man, I had a bearish target, and I left this on from another presentation I did. I had a target down here at 210. Okay, and that was back here, and this I put drop and stop. Very frustrating. Okay, it dropped down here to this 215 area, and then just died. Okay, just went sideways. And look at that. It's still trading there. Can't get above that 21 period moving average. If you look closely there, we touched the 21 period and traded off of it. Okay. Today, just like we did Friday, we opened up at the 21 period moving average and sold off during the day. But that was very frustrating for a trade that I had on. And I think silver's going to have some notes on it too, because I forgot. Nope. Okay. I took those notes off. All right. Great. So now silver, a little different story for silver. Silver's very interesting. Came up, our target was $30 on this. It came up to 29.5. Missed it by 50 cents. What can I say? That was just shy of our $30 target, and now it's dropped slightly, but silver's still up 28% year to date, and that is a good return for the metals. Good solid return for silver. And as I mentioned back in March, okay, if you don't have positions in gold or silver, you might want to establish some. All right, and then if you have some, you might want to increase them. Okay. Again, I'm not talking about a major allocation of portfolio, but definitely a little heavier than what traditionally we keep around 5 to 15%. I would definitely say you want to be in the mid to upper range of that number if you're on the lower end or you have done. Okay, just as kind of that thing. Why? Well, just a lot of things happening in the world that might prove to be a valuable decision. But and then we trade options around it to kind of hedge our position. So you can see here we're off the highs, but we're holding nicely here, right around the $28 level, trading at 27.95 right now, so a little below 28. But if we're still trading above the short-term 21 period moving average, and there's lots of support down here below it if it starts to drop. All right. So now moving on to the interest rates here. Let's start with TLT. Now TLT is up 1.6%. Okay. More notes. Let me clean those up. I'll just leave those there, and I'll tell you what I was looking at. So the encouraging drop was that I had a target. I have a target down here. Okay. And effectively, this is for higher rates. Okay. And that drop, okay, that we got all of a sudden vanished last week. The market just reversed, and up we go. And that means the long end of the curve, the yield is dropping. Okay. As bonds go higher, yields will drop. And this is taking the 10-year well below 4.5, I believe. And just taking us away from kind of the danger area for right now. But this is an interesting day. I would like to see if we can retake that long-term moving average. That's the gold line up here that's kind of snaking around here. I would like to see, all we did 2 weeks ago was we made a lower high, okay, lower than this pivot point, okay, lower than the previous point. All right, so we're kind of in no man's land when it comes to bonds. And I think the market's just really waiting for this economic data that's going to come out this week. Okay, they're just still processing that economic data, and it's real whipsaw market right now. Lastly, we'll take a look at SHY, which is the short end of the curve. You can see we're only up 10 basis points today, but man, that is down. Okay, compared to Friday, when we really rallied. Okay, look at this gap down today, and trading. Well, it's not trading 10 basis points higher than it did according to my chart on then Friday, because rates are really spiking on the short end of the curve. You know, I saw an ad over the weekend for a 9-month CD at 5.45%. 9-month CD at 5.45%. And this is causing a lot of problems for um, bigger commercial projects, because I think, and because I'm actually getting some of this firsthand knowledge from some colleagues of mine, that these various companies, especially development companies, general contractors, are slow paying their vendors and holding on to cash, and they're sticking them in short-term notes because they can get 5%. So trying to make a little vig on that before they send payouts. Very frustrating for a lot of suppliers and a lot of vendors as they, play this interest rate game, which has always been played. Okay. But sometimes it's just a little bit more obvious than others. So let's then take a look at the yield curve. We're inverted right now. Again, I mean, we haven't been non-inverted, okay, for almost 2 years. The inverted yield curve, this is as of Friday. Okay. This will drop. I think we'll get back down to at least 100 basis points again. So we rallied. We were coming down, and I was a little worried when we got to about 104, but we rallied off of that, got it back above 100 basis points. Now we're trading at 95. That'll be lower today after market close today, and we will see where it goes from here. But I think for me, every week is interesting when we have economic announcements, but this week is of special interest for a variety of reasons. One more chart here before we go, and that's on the 30-year mortgages. Volatile ride here on mortgages as we were down at 7% 2 weeks ago, and then rallied hard up above 7.25, and then look at this, trading down sharply. Now the blue line is the Mortgage News Daily um, average, okay, which is a daily rate. The other two colors that you're looking at there, the Mortgage Bankers Association and Freddie Mac, are weekly, okay, so they will not be reacting like the MND, excuse me, does. And boy, volatile rate in a 25 basis point range, and we're seeing that. We're seeing that on the bond charts. So something to watch where mortgage rates go. Home builders are still playing the game of buying down that rate. A lot of people, the sentiment is that these rates are high. These rates are not high. Okay, they are still on the low end of historical averages, and they are higher than they were, and people are just wanting them to go back down. They were ready for that easy money. They enjoyed that easy money, and now it's a little harder. Now it's a little harder to attain, and that's a problem for a lot of people. So they're looking for rate cuts. They're looking for the government to come and save them. Oh boy. All right, so let's move on, but don't want to go down that slippery slope and get on that sandbox either. So let's take a look. We do have earnings. As I mentioned, we have 175 companies declaring earnings this week, and we still have a lot of names that you might recognize, okay? So tomorrow we do have aftermarket close tomorrow. We have CrowdStrike, and then the next day we have Campbell Soup and Dollar Tree on Wednesday morning. Wednesday after noon, there's Semtech and Lululemon or Lululemon, however you want to pronounce it, is Wednesday afternoon. And then Thursday, we have jobless claims. Now, that's when Wednesday is when the economic data come out. So we have service PMI on Wednesday. We have jobless claims on Thursday. Get ready for a revised number again. And then we have unemployment, and that's where all eyes are on Friday is unemployment. Okay. So there is your list. So we still do have some significant names, familiar names that are having earnings. And that leads us to our kind of our trade of the week. Now, before I do that, remember on this type of trade, we're going to be looking for a big move. And so what I want you to do is, if you haven't done it already, we have a free guide that is available to show you how to trade this strategy that I'm about to talk about to show you. And it's available at ewotrader.com/straddle. Okay, be sure to go by that link and you can download your free guide. It's going to talk about strategies that we trade around earnings and during earnings time on specific stocks. So let's get to it. I'll show you the stock that I'm focused on this week, and that is RH. What is RH? Well, this is a company that used to be known as Restoration Hardware. All right, and interestingly enough, this is coming in priced at for a move of about 10 to 11%. And historically, the stock moves over almost 16%. So that's why we're going to trade the strategy here. Now, if you don't recognize this chart or what you're looking at on screen, on the left-hand side, of course, you have your chart. On the right-hand side, you have your what we call risk graph. And you don't have to worry necessarily about all the lines on there. The black line is the most important. That's at expiration and really kind of tells you what the strategy is. And this is a strangle, a long strangle. Simply buying a call, buying a put on RH. It expires on the same date. We're looking for that date to be a week from this Friday. So that would be, let me get the date for you real quick. That date would be the June 14th cycle is when I would kind of look at it. Now, here's the thing about RH. The earnings date could be as close to us as this Thursday, or actually next week around next Wednesday. Even their company's website isn't telling us when the exact earnings date is, and I have different sources that have different dates, so that's always something to be concerned about. So you might want to maybe double or triple check on your end. But here's the thing: as we implied volatility. Now, here's the thing. Implied volatility is showing that earnings are imminent. Okay. What happens and how I know that is because implied volatility on the short-term options surges almost on every stock right before earnings. Okay. It surges. And that kind of tells us, hey, something's coming up. Be aware, be ready for a trade. And in this case, it's on RH. So I'm not sure of the date. But we have a trade on that should cover the date, whether it's this week or next week. So I'll update you next Monday if we got to move or not. Obviously, you can track it yourself and what this strangle would do. All right, for you. But the stock is pricing in about a 10% move, and historically it moves more than that. So that's why we're doing this type of strategy on the stock. So once again, you can download that guide we showed you just a moment ago and learn all about it. So that's it for this week. I appreciate you joining me. Please like us, subscribe. You can get this each and every week on Monday. And I enjoy being here with you. So everyone have a great trading week, and we will see you next time. Take care.